today is Paul Welch, the CEO of Buccaneer Energy, following the official announcement that the company have selected a drill rig at the confirmed location for the Falk 3 well, now I think called Allar 1. Well, thank you, Paul, for your time. How are you?
I'm great. Thanks for having me today. Good to speak with you.
No, it's good to be speaking. Yeah, it's good to be speaking. So I noticed this slide from the RNS there. So it's just north, it looks like, of the Falk 1. So just talk to us about that location. Now we can really see it. It's a part of the same system, but a different reservoir you're tapping?
It's the same reservoir. It's just a little bit north of the existing Falk 1 well. And you can see that white stripe there represents the lease road into the Falk 1 location. The Allar 1 is north of that. And what I think is important here is that in the subsurface, about probably, 100 feet to 200 feet to the right or to the east of the Allar 1 location, there's a bounding fault. And that bounding fault has separated this Falk area from the main part of the Pine Mills field forever. But that fault wasn't discovered until 2018 when a 3D seismic survey was shot over the area and the area was reinterpreted. Okay. That happened in 2018. The Falk 1 well was drilled in 2021. And when that well was drilled, it proved that had been isolated from the main part of the field. The original reservoir conditions were encountered. The Falk 1 well came in at 140 barrels a day, water free, whereas the wells in the main part of the Pine Mills fields were discovered in 1949 and were producing at water cuts that are in excess of 90% in most cases. So it was a very significant discovery at the time. And what we're doing now is just essentially extending that reservoir system to the north. So beyond the Allar 1, which was the old Falk 3, we believe there's potentially a further location to the north, which at the moment we're notionally calling the Falk 4. So it's that bounding fault that we can't see on this surface look that has been the important factor in developing this area. Okay,
good. And the pad construction is starting in days, spudding towards the end of October. Timeline's realistic, do you think?
Yeah, so I think that's right. I mean, again, we'll spud last week of October, first week of November. Again, depending on the pad location, you can see that most of the road is already constructed into the pad. The pad is an area that's been relatively cleared, so it shouldn't be too difficult to complete this pad. Pad construction will start, we believe, today. Take a couple weeks to do, and then we'll spud. And then once we spud to TD and evaluation is about 2 weeks. Given success, then we think it will be another 2 to 3 weeks before we can get this well up and on producing. Good. So hopefully, if all goes to plan, we can have this well producing in November, if not November, early December. So it's important. Now, the other thing to remember is that this field has a field limit of 124 barrels a day, so that's the maximum we can produce this. The Falk 1 well produced at 140 barrels a day for the first part of its life, and then flat at 124 barrels a day until it declined after about 18 months. So really important well for us. Again, put it in perspective for people who don't know much about us is that we're making about between 120 and 150 barrels a day. So an additional 40 net barrels a day to us is a significant increase in our revenue stream.
Okay. And will you know fairly quickly that you're on track for that 124, or will it take a few weeks after you've spudded it to work that out?
Well, you never know exactly what you're gonna make until you start producing it. But based on the information that we obtain when we get to total depth of this well, we'll have a strong indication that it's going to be a successful well. Okay. Then we'll put it on production and we'll see. But we expect, given the reservoir conditions that we see, it should come in in that vicinity. 100, barrels a day. Good.
Well, I know you just want to remind people of the investment case, so I just want to go through this slide just briefly.
Yeah, so Buccaneer, again, focused on Tour, Texas, 3 areas operation, east, south, and west Texas, primarily focused on East Texas. Since I've come on board in May of 2024, we've been focused on East Texas, the Pine Mill area. We've done a number of workover programs. Those are now complete. We've essentially almost doubled production in the field itself. And now we're on to the next phase, which is growth. And the growth phase is going to start with the drilling of this, the Allar number 1. And then given success with the Allar number 1, the associated gas, we believe, has the potential to essentially fund or fill up a Bitcoin mining operation. So instead of flaring or venting the gas, we can generate revenue from it. So it's so it's a really important next step in the company's development.
Good. And this is the rig that will be actually moved to the site, is that right?
Yes, that's correct. So this is showing a picture of the rig. It's on another location at the moment, but fully rigged up. That's the rig we're going to use. Parts of it are already being stored on the Falcon 2 location, and as soon as the pad is constructed, they will start being moved over to the new Allar 1 location.
Excellent.
That is the rig.
Good, excellent. And just quickly take us through this slide if you can, Paul. So this is about what you...
Right, so this is the important part of the slide. And I know you're a numbers-focused person, so that's why we put it in here. But okay, what we're showing here is the investment. So our net investment for this well is about $363,000. The NPV that it generates is $1.75 million. Again, this is all at $60 a barrel, so almost a 5x return on our investment here. The IRR, again, north of 300%, and the payout is 6 months. So I think the more important number here is that we produce, it's going to prove up about 300,000 barrels of gross reservoir volume, and it'll allow us to generate a net $55,000 per month in free cash flow to our bottom line. So that's at $60 a barrel. If we get any help on the oil price, that will increase. But at the moment, at the $60 oil price, again, flat, we get $55,000 a month net. And also, as I've said in many times in the past, what we've been trying to do since I came on board is to close that gap between our NPV 10 number and our market cap. We're making progress, but now we have another 1.75 million to closing that gap. So we'd like to see that gap further reduce, getting up to where we think we should be, $10 to $12 million market cap. Where at the moment we're probably 2.5 to 3. So this is a big step in the right direction. Now, given success here, we drill the Falcon 4. It'll be identical to this. So the costs are the same, the returns are the same. So we'd have 2 times the $55,000 a month in free cash flow, which is 110. So it starts to really add up from here moving forward.
Okay, that's good. That's good to hear. And so you're saying that the Allar 1 will give you 55,000 per month. So then the Falcon 4 maybe will be named as well, also gives you that sort of a number. So you're looking really at a total free cash flow of about 150,000 per month.
So we would add an additional $110,000 per month with these 2 wells between them. That's net to us. And then we're making at the moment at $60 a barrel, we're making about another $25,000 a month. So I would say, total free cash flow, assuming no change in oil price, would be between $130,000 and $150,000.
Okay. And I mean, what would you say before this is a bit more of an information on the I can see the Falcon 4 location there as well, but investors who are thinking, well, it's not very much, is it? I mean, you've taken, I won't say a while, but it's taken a while to get to this point. Obviously, they're not cheap to drill, and it's adding sort of 40 barrels. It's not adding a lot. I mean, what would you say about that?
Again, so we're at the moment we're making 100, between 130, 150 barrels a month, adding 40 barrels a month to it with the first well, and then another 40 with the second well. We're taking our production, up over 200 barrels a day, adding 110,000 bucks a month in cash flow with very little change in expenses. It's really important to us. I mean, again, the other part that's interesting here is that because we're operating onshore Texas, we make very little water. Our operating costs here are less than $5 a barrel. Okay, yeah. So, this is very, very profitable stuff. You can see the payouts. So, if we can continue to invest in projects that have a 300 to 400% rate of return, I mean, the sky's the limit. Mm-hmm. So, and again, also, that doesn't include any contribution from the associated gas with Bitcoin mining, which I'll talk about in a second. Yeah. So that is just purely from an oil perspective, right? So it's a very good investment.
Okay. Well, before we get on to the Bitcoin mining, let's just finish on this one. So I can, of course, see you've got I think it's the proposed Falcon 4 location. So again, it's not too far away. And are you looking to tie these wells into the existing infrastructure, the existing pipework that is nearby?
Right. So if you look at that figure, you can see we have the Allar 1 and the Falcon 4, and then you can see just in the bottom part of that slide where it's labeled Bitcoin Mine, the Falcon 1 location. And so the Falcon 1 location currently holds the Falcon 1 and Falcon 2 producing facilities. So everything will be pulled back to the Falcon 1 location, and that's where we'll sell all our oil, we'll transmit all the gas, and then again, given sufficient amount of volume, that's where we put the Bitcoin Mine. So everything will be located in the vicinity of the Falcon 1 current location.
Okay, good. Well, the Bitcoin mining then, you've got some more information on that now, haven't you? So let's just go through some of that.
Yeah, so let's talk about this slide here. So this is a slide I know that you love to talk to numbers, so this is why I put it in here. This is a numbers slide for you. So if you look at the current current production, we're making about $23,000 a month in profit based on a $60 oil price. We add the two next development locations in the Falk area. That adds 80 barrels a day net to us. We take that up to $150,000 a month. And then when we add the Bitcoin mine on top of that, assuming a flat Bitcoin price of $120,000 a coin, we add another $74,000 a month. So we take our net cash flow up to $215,000 a month. So, this is why this is important to us, the Allar number one, because it essentially opens the doorway to all the other future opportunities that lie in this part of the field. Again, we're just focused at the moment just on the things we're looking at in Pine Mills. There's other parts of the business that we have, but this is why this is exciting for us, because it really opens the door to a lot more cash flow.
Okay, good. So then January 26th, so really you're going to have quite a busy, next 6 months really, aren't you?
Yeah, so the way we believe it will work out here, we're drilling the the Allar number one this month, next. We'll finish that in November. We'll just see what we have, and then we'll based on how our partner views it, get to the Falk 4 early part of 2026. Given sufficient volumes of gas, we'll then start the Bitcoin mining development program, and we expect to get that up and running in the first quarter of 2026. But again, this is all contingent on what happens with the Allar number one.
Okay, good. And of course, the drilling of the Falk 4 in early next year as well.
Correct.
Good.
Yeah.
Good. Okay, take us through some of the numbers on this. See if it's just a bit of a nice little bonus, or if it's going to be a significant cash flow generator for you.
It's more than just a nice little bonus, right? So this is important to us because, firstly, the gas that we have at the moment is really restricting our production. So the Falk, and you can really clearly see in the Falk 1 versus the Falk 2. The Falk 1 has been making about 65 barrels a day, whereas the Falk 2 has been making about 30. And the reason for that is we have the ability to take the back pressure off the well by using the associated gas to cover the tops of our tanks in the facility there, so we can essentially alleviate some of the back pressure, and that allowed us to double production, right? So when we can do the same thing for all the wells, we expect that we will increase the average production per well, a significant amount, and so that's important one. So there is economic benefits associated with just taking the gas and either flaring it or burning it or doing something with it. Now, we don't want to do that because from an ESG perspective, it's not great. And then we essentially think we're wasting a resource. So the opportunity we came up with was to put a Bitcoin mine here, see what it can do, and looking at the numbers on that, not only does it benefit us from a ESG and environmental perspective, but it also allows us to generate a decent amount of cash. And if we go to the next slide, we can see what that looks like. So what we're showing here is based on the assumptions we have here of a $1.5 million facility with 200 Bitcoin miners. Assuming a flat Bitcoin price, again, we've assumed that $120,000 a coin, which is kind of where we are at the moment. The rate of return on that project is 58%. So that's just flat Bitcoin price, and it pays out in under 2 years, which is, again, it's an okay investment. I think most people would really like that. However, we're making money from something that would have been flared. So it would have been a wasted resource. And so for us, it's a really good opportunity. Now, if the Bitcoin price continues on its upward trajectory, like we've seen over the last 3 years, you can see that the IRR, which is the figure on the right, the IRR increases to 375%, and the payout is under a year. So this Bitcoin opportunity is really interesting. Bitcoin mining has taken off in Texas since 2022. So we're not early to this. We're kind of later to this from some other companies. It's primarily the small producers that don't have the ability to put it in a pipeline and monetize it that way that have been involved in this. And so, we think it's our time to do it, and we think there's good infrastructure there. And based on the way things are going, it's an opportunity to make some additional cash flow. Okay,
good. And when that's all in place, then so payback in 2 years with the flat price, you're going to be getting about 0.6 Bitcoin. Monthly revenue is about $74,000.
Correct.
Okay. Yeah. Well, it is more than just a nice little bonus, isn't it? Then it's a nice little big extra thing to have. Yeah. Okay.
Yeah, I mean, but I think the important other thing I want to say here is that we're not changing our spots. We're going to be an E&P company that has a Bitcoin mining, side business that's profitable. What that allows us to do is essentially develop another tool in our tool bag, where if we go into an area that's gassy but doesn't have any gas takeaway, employing a Bitcoin mining operation, allows us to monetize something that probably couldn't be monetized in the past. And again, ideally, you never want to flare anything. So flaring is possible in Texas. You can get permits to do it, but it's not something that people like or people want to do. So if you can make money from it, you really should.
Excellent. Good. Well, thank you, Paul, for that. And I hope you can keep us updated on how that construction of the pad is going for the Allar 1, and then hopefully be going on site. And I know there's a good cell reception, so we can hopefully catch up when we can see some interesting things on site. But for now, thank you very much for your time.
Sure. Yeah, I should be on site the first week in November. So definitely, once we spud and start to drill, we'll definitely have everybody onto site and they can have a look at the operation ourselves. So we're excited. It's been a while to get here, but we're really looking forward to getting this well.
Well, Paul, thank you very much for your time.
All right, thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.